Good evening, everybody. This is Stefan Dotel from TradingCandles.com. It's June 2nd, 2014. We'd like to start with our disclaimer. We are not financial advisors. Any information presented here is for educational purposes only, and we do suggest you do your due diligence before making any financial decisions or investments. So today we issued a new watch list and a new list of our closed trades on our website. One of the stocks we added is AVGO. It's a semiconductor stock. It has very good financials and it's based in Singapore. I usually prefer my stocks based in the U.S. just because you're never quite sure what, well, anybody's economy is going to do, but that of a foreign country. And we did add three more: SE, VNO, SAFM. And these were added strictly for the technicals, technical charts. And we'll move on here to today. We had a manufacturing report from the Institute for Supply Managers. And I'm just going to stop here for a second, as I'm quite sure a lot of people are thinking, what is the ISM and why do I need to know about it? This is way over my head. Basically, one, if you just go to our website and you go under the dictionary, you'll see that the ISM is the Institute for Supply Management. Basically just compiles data on purchasing, inventories, and manufacturing. All that means is the Fed goes around and asks some companies, manufacturing companies, how they're doing. How are the orders coming in, and what are you selling? And that's it. Very simple. Just not complicated ISM. While I'm here on our webpage, Trading Candles, if you go onto the watch list tab here, you can get our watch list for stocks, for the Forex and the ETFs as of today. And over here on the right, you can get our closed stock trades, option trades, which we've only had a few this year, but they've all done quite well. And we're hoping to get some more in. We'll see how that happens. But anyway, it's a little bit of a way to use our website. We do have some stuff here in the dictionary. Don't let these big words confuse you as to what's going on. So anyway, basically, we're having a lot of manufacturing. Service sector is also giving out some data this week. Hopefully that will be good. And this information is frequently just overlooked by traders, but it is very predictive of the future. I wouldn't trade off of it per se unless you're somebody who trades news, but this will usually find its way down the line in a couple of months, and I wholeheartedly believe this supports this uptrend that we have been in that just does not seem to quit. And just to show you what I mean by that is here's a 2-year chart of the S&P 500, and this is the chart that won't quit. It is just going up. And I see no real fundamental reasons for it to pull back. Beautiful chart. That's all I can say is just a beautiful chart. The dollar's been continuing to make its move off its lows. I don't really have a specific catalyst. It's definitely worth watching. The Fed is buying back, selling less bonds, so there's less dollars out there. So supply and demand, less dollars, so something's going to be worth more. Of course. And it's, again, always good to watch some currencies and compare them on how they're doing. Today, under our little sector watch, some of the communication stocks seem to be developing a little strength after a period of weakness. We have owned a few up and down, and they did have a little bit of a pullback. Comcast, CMCSA, and CBS both had a continuation of their move up off their bottoms. We do have a position in both of those stocks. Fox is at its high, very long-term channel, which is a very different type of trade. And we may pull that chart up and look at it in real time. And finally, just to show you the ISM chart, again, just to make it not so scary, like some big monster. Basically, anything above 50, they say, is positive, and anything below, this 44 area is negative. So we've had this uptrend in manufacturing, which means an uptrend in jobs, and uptrends in jobs means, probably an uptrend in income and an uptrend in sales, and it feeds on itself in this loop. And right now we don't have inflation holding us back. So anyway, it's very simple. It's just a chart. How much are we manufacturing? Doesn't really get much easier than that. So try not to make it too complicated on yourselves. And so I thought I'd pull a few charts. One being the IYT, which is the transportation index, which is we did sell the other day to move into some oil stocks. And I haven't even actually looked at this, but if the manufacturing is good, the transportations are going to be doing well. So I'm going to pull up the IYT, which is what we sold. And, it had a little update. I wouldn't say that's, a banner. We got a 0.5% here. Still on some big volume. It was still kind of high. So I'm not feeling especially bad that I sold it. Some of these people may have sort of heard the news before we did. So the stock we added to our watch list today was AVGO. And that is a very nice trend. Just up and up. And if we want to take a look at the 2-year chart, which I like to do, if I'm thinking about trend trading a stock, is this thing was in a very flat range for a very long time and has doubled in price in the last 12 months. So it's doing something right. And, some people like it. Some people get afraid when something goes up that high, that fast. You can wait for these pullbacks, but I think it's a good stock. Wait for the proper entry. For me, I would probably be looking for a pullback to down here someplace. We had this little gap, and if we were to do our Fibonacci sort of measuring technique, we pretty much hit the target already, which would be up here at the most. But good stock, keep your eye on it. And the other couple stocks I was just going to look at was Comcast. Not a huge day. It was 0.7% up, but came down, broke its moving averages, had this little double up, back above both averages. And if it breaks this level here, the measuring technique is going to put it right back at its high. So that'd probably be another 6% from up here. And it's a pretty good stock. And CBS, you can see this is quite a different chart. This thing just went down and didn't make that double bottom-ish formation. But you do see I have a price target here, which means fundamentally I'm thinking this thing is actually worth $75 in a fundamental standpoint, where Comcast I think is already valued at its where it belongs. So again, why is this going down while Comcast goes up more? Doesn't matter. Just look at the chart. See, in this one it was up a little over 1% today, and if we break in this area, we're probably going to be going up into the 65-ish area right here at the top of this gap, and the top of this here. So you're looking at that could be a good 8%, gain on this stock here, and maybe a month or two time with good fundamentals. Let's look at this stock on a 2-year chart just to get an idea of how this trend looks over the long period of time. A very nice chart up. We had this pullback. See, there's a nice hammer here. This hammer bounced right off support of the moving average supports, came down, actually almost called us out when the moving average crossed. We got the red arrow, but it didn't happen at the same time, so it kept us in, and I felt very strongly about this stock. So I actually added more to our position when we get this green arrow pop back up over in here. And I would actually add more with a potential 8% more profit on top of what we have already. So this is a good example of trend. And we'll go down to what else do we have to look at today? PKG, Package Corporation. We do own this stock also, and you can see the MACD has just been slowly going up. This has been slowly going up, and it's holding this moving average at a nice 1.62% pop today. Definitely easily go back into its highs. I have a fundamental price target of 81, which I really don't see any problem with it hitting. Just got to be patient, wait it out. This is another one where it's nice to look at a long-term chart. This is how I pick a lot of my stocks and decide whether I'm going to trend trade or whether we're going to go ahead and just trade this like a swing trade, a day or two or three trade. When I have a stock that has all these nice, beautiful small candles, it's not breaking the fast moving average, and that's great. Now, once you start seeing big candles, like out of nowhere, small, and then all of a sudden bigger, big, volatility is increasing. People are starting to move money around. So that tells you, wake up, pay attention, see what's going on. But you can see here, the support level of the top of these candles, as well as the bottom of this very large candle, was not broken. It's basically right at the bottom of this candle. So we've come down, bounced off, bounced back up, never got any sell signals. So very good chart. I see no reason for it to keep on trucking. And sort of to mingle charts, if you look at the 2-year chart, the support level I drew basically was right here for the most part as it came off these bottoms. Eventually you get used to looking at different time frame charts and being able to blend the candles together, and it can be quite helpful. But to keep it simple, stock looks like it's going up. I think it's going straight up. I think we have some good action on it. And I'm going to pull up FISV. Now this is a trade that we talked about getting into. We had this big breakout, this big giant candle of this long-term support, resistance level here, and then it rode back down. So we thought it'd be a good idea to get into here and just stop ourselves out somewhere down here if it popped down here. We gave several targets. That would be the highest target we were looking at. I personally was using something called the average true range, or an ATR, which was, I don't know, somewhere around a dollar, $1.25. And so I was just trying to get up into here and let it ride. It was a very tight trade. So with those, we're expecting to be out in 3 to 5 days. We're going to put more money in. We're going to go into the position all at once and get out all at once and strictly follow our rules. So far, we get in on this day here. which closed at 59.88. And so we got out, I think I got right about here to close at 60.37. So we picked up 50 cents. You know, you get a lot of shares. You know, that's a little bit of money in your pocket. The reason I got out was because my rules were a 3 to 5 day trade. I was unsure of the market conditions, and even the smallest profit, you know, is something. Even if you only had 200 shares and you made 50 cents, you know, you made $100. It's and not a lot, but $100 is $100. And speaking of dollars, the last thing I was just going to pull up just to show you was a chart of the dollar, which is kind of a big messy looking thing here. But you can see we had this big hammer here back at the beginning of May. And the dollar has just been running up since. So there's a little consolidation period in here. You can tell it's, you know, a little bit of indecision. We get these big candles, you know, topping tails, bottoming tails, and then it takes this run back up. So the dollar's been strengthening. It's at a little level of resistance here, but it's been interesting to watch. Let me run back and do two more charts over here. Fox, we talked about as the other communication stock, and you can see that this is right at its high. It's bumped on this level 3 times. So compared to CBS, I'm not going to be anxious to be running in and buying any Fox at this point. We want to buy that down here. And when we talk about playing the edges in a sideways trend, we're talking about buying at the support or selling at the resistance. And again, just to help show the way I pick stocks, I'm not trading Fox. I just happened to pull it up today. This doesn't actually have a bad trend. However, when you look at the 9-month chart, you know, all of this has just been chop and hard to trade. So, you know, once we get into this area, it was a no-go for me. But depends on your trading style. Maybe something like to look at. And just in preceding a video I'm going to do on hammer, shooting stars, and some candle patterns, this chart just had everything on it. It was just amazing to me. You first can start here with this bullish engulfing candle. Let me make this chart a little bit smaller here. Pull it over here. So we come down, we come up. We have this bullish engulfing. This candle completely engulfs the day before, which is a bearish candle. It gaps down, goes down a little bit. We run sideways. People might call this a hammer, but again, it's all in trend, and that's a small trend. I mean, for me, that's just sideways movement. It runs up a little bit higher. We may call this a shooting star. And then we get this doji in here. So this is like topping tail, people moving it up and selling it off, moving it up and selling it off. And this would be a non-idealized bearish engulfing. And I say that because it didn't even run up here to engulf the whole candle. It just came down. So it has the same implications in that nature of the bearish engulfing. Now we come up, get a little consolidation, we get a run up, and here is a harami. This body is inside of this body. You can see there's no tails, a little small tail, but 2 even tails here. So we get some indecision right before earnings. It gaps up, runs down and closes down, and gaps back down. Makes a little bit of move through here. And something to watch for, just when something is going up and you start to see a lot of bottom I'm sorry, you start to see a lot of topping tails. You want to take notice. I mean, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 out of about maybe 16 days. It's kind of telling us the sellers are just not wanting to let this thing go higher. And then this one just kind of drifts lower. There's really no per se candle pattern, but this is real-time momentum. This is how you read momentum on a chart. This is the speedometer of the chart, basically. It runs down to 1 hammer and 2 hammers. Now, this is a good explanation of, or example, should I say, of there's very few V-bottoms, which is this kind of is a V-bottom. They're more rounded tops with W's, and often one candle, does not make a turning point in something. So here you have 2 hammers in a row. You could have had another hammer over here. This just keep building upon itself that, we have a bullish thing flowing here. And it's kind of the same up here. We run up here, gap up. We kind of get this shooting star. It's a little bit big for a shooting star. And, we'll be making videos. We do have these on our website, but we'll be making videos covering these different patterns. And again, if it feels like it's over your head, just listen to your head's full. Shut it off. Come back, listen tomorrow. That's how I learned over years. And, suddenly I started seeing things, understanding things, and things became much simpler. So topping tail, then we got a hanging man, we got another shooting star. So now we got 3 bearish candles in a row. And then it finally just pulls down. This is kind of another bearish candle. And pulls down, another bearish shooting star, and pulls down. And finally here we are again, we're back to a hammer. And hammers are my favorite, most reliable candle, the hammer. And we run back up, a little topping tail, we get a bearish engulfing. So now we got 1, 2, 3 negatives. Now we have a harami. We have 2 haramis. We have this white one into this red one. That's 4 bearish candles. Now we get this red one into this white one. That's 5 bearish candles. Now we have a shooting star again. That's 6 bearish candles. Another bearish engulfing. That's 7 bearish candles in a row in this move right here. Now that takes an experienced trader to see that. But when you can see that, that thing pulled back from 80 down to almost down to 75, we'll call it 76. So pull down 4 points. So hey, that doesn't seem like much, but well, 5% in 2 or 3 weeks, you do the math on that, you're talking a 80% return on your money per year. Again, just sorry about messing that up there. It's such a beautiful thing. Just look at that area again. Topping tail 1, bearish engulfing 2, harami 3, harami 4, shooting star 5, bearish engulfing 6, hanging man 7, boom, down to the hammer. So all of a sudden you're going to start to see that. And to simplify that, we'll just say, and you see something going up and you see a lot of these topping tails, that's not a great sign. When you see something going down and you see a lot of big tails at the bottom, that's actually a good thing because the buyers are stepping in. When the tails are at the top, the sellers are stepping in. So, remember, when the tails are at the bottom, buyers are stepping in. When the tails are at the top, sellers are usually stepping in. There's a little bit deeper explanation, but I have probably gone on quite long enough, and I hope you have gotten something out of tonight's presentation. I'm hoping you'll come and visit us for our next presentation. Happy trading, and have a good night.